Yeah, hello. Thank you for your purchase. Please, this is a quick guide to support the video sent to you earlier about how to set up your trading MT5 platform. But first of all, I want to show you how you can log into your account, how you can log into your trading account. So you can always log in to your trading account from the platform. When you click platform here, this platform, click on platform. So it will take you to, you see advanced here, you see beginner, you see advanced. So click on advanced. It will take you to MT5 trading platform. So you can access your MT5 trading account by clicking on it. Okay, so here you have your MT5 trading account opened. So what you do next is to take the number. This is your number to log into your platform. So you copy this number and go back to your trading platform. So on the trading platform, you just go to file, from file, then you will locate sign in or log into trading account. So I need to open the account, the digit number you copied, you paste it here and put your password, the password you used to register here. So you log in. Remember, server is binary.com/server. So you just log in. So when you're logging, after your login, the next step is to set up your trading platform. Remember, your trading platform will not be like this. So, but how do you set up your own to be like this? You can just do that by clicking on you right click and scroll down to property. So from property you click, it will open a dialog box like this. Here you can set up your background, set up all other colored and all that. So you see background here, you can change the color to whatever other color you need, but I have white on this one. So then for the bullish candle, I have it on red already. Yes, bullish, but you can change anything to any color you want here. So after you're done, just click OK. Then this is what you have. Then there will be a grid here, something like this. So for you to remove it, just click Ctrl G. Click Ctrl G, it will disappear. If you click it, Ctrl G again, it will appear. So that's just it. So the other indicator we are going to add for you to start trading is called moving average. We are going to add 3 different moving average. That's moving average with 3 different periods. So we're going to add them by going to our insert. When you click on insert, you see indicator. From indicator, move down, search for moving average. So that is this. So I have this as 5 period, then exponential, then close, then black color. You can choose any other color, but I have it as black, and I make the line thicker. You can decide to choose any other line you want. So you click OK. This is the moving average here above added. Then we're going to add 2 more. You go back to insert. From insert, moving average, you choose 15. Exponential, close. I'll change the color to blue. Then remember it's 15 we added here. Exponential, you just change the color to blue. So you click OK, it has added. So the next one is to add another one, which is moving average. Then you change it to, this time around you're changing to 60. So we are changing this to 60, and we are changing the color to green. I'm changing the color to green. You can choose any color you like, but I'm choosing green. So you enter. So this is it. We have, at this time we have the moving average indicator. Then I'll add another indicator, which is parabolisa. So hover to insert indicator parabolisa. So here we have 0.05, 0.5, or you can choose 0.2 or 0.02. The smaller number it is, the more accurate, but I'm okay with 5, and I'm okay with the color red, so I just add. You can see the moving average has been added. So now let me add one more, which is MACD. Okay, I have MACD, can add. Okay, this is MACD. So here we are done with adding indicator that we used to trade. So now whenever you want to trade, what you do is you come to your platform, log in. After you log in, you will see this indicator, moving average indicator. You see this, which is 60 period, 5 period, and 15 period. So if like this market now, you know the market move up and down, and the trading rule is buy when the price is going up and sell when the price is going down. So as the price is going down, you see the moving average going up as the price was going up, and as the price was going down, you see the moving average going down. So the same thing apply, and you see the green candle which shows the price upward, and the red candle which shows the price downward. So you understand these terms before now. So what for you to trade this market, like for example this market, for you to trade it, this is what we recommend. You know, you are supposed to start trading it from here where the price start moving to this second candle, to this third candle. But here we don't advise you trade. But we advise you enter your trade after this third candle pierce the 60 moving average period. So it pierces the 60 moving average period, and after that you enter your trade at this particular candle, the fourth candle. So but not only that do you confirm, you also confirm by this 50 moving average, this black color peering above the 60 moving average. You see these two moving average, the 15 moving average period, the 12 moving average period, peering above this 60 moving average. You can see immediately peer above, they peer above, it will give you a confirmation that this price will continue to a certain distance before reversing. So for you to enter a buy trade, always make sure that this two indicator, 5 period and 15 period moving average, pierce this 60 moving average line. So immediately it pierce, and this parabolisa point, you must ensure that it appear below, and not just appearing below, you must ensure that the strength of the parabolisa is good enough to give you a clear indication. You could see the gap from here to this particular place, from this particular place. So it shows you that the strength of that market move is good enough for you to enter trade. So because before you enter, you don't just enter trade with the confirm candle, green candle. No, you also check the indicators. Do they also meet the required uh, strength, the required sign or signal to trade? So for you to confirm, you check this moving average line to make sure that these two moving average line cross this green candle move 60 moving average period, and that this parabola is also uh, in a good distance or strength. So not only that, so you have how many indicators that have showed you a confirmed signal. You have moving average 5, moving average 15, moving average 60. After confirming this, you confirm the parabola, then you confirm the MACD. This is the MACD. So you must make sure that all these agree, all these indicators agree before you enter trade. So you could see what happens. So what you will check, how to check if they agree. You just go to your upper, then choose this plus sign. The line will go with you. The line is on white. The line is on white. So I will change this background color so that we'll be able to see the coming. I'll change the background so that we'll be able to see it clearly. Let me use coming. Okay, let me use this. So you see this. So you just go to your plus sign, check it, and when you come here, you will see from the first green candlestick, the indicators did not agree. The MACD did not agree with the market. And at this time around, you also note that this moving average has not agreed also, because it's still yet to cross the green moving average line. So it has not agreed with it. Then from the second green candle, it has not agreed also. You could see the line from up here to down here. You could see the MACD was still showing down in the down sign. So, but on the third that it pierced the 60 period moving average, the MACD agree. It shows a little sign here, not too uh, much, but it has show you a sign that I'm coming up right now. So when you look at it here, where it pierces the 60 moving average line, you see that it's on green. So but on the fourth, where you're supposed to enter your trade, it has bring us a total sign, both from the moving average, then from the parabola, and from the MACD. So this has shown you that yes, I'm moving up, and the parabola has shown you a strength of a good distance. Remember I told you not to enter here, because you could see what happened here. Look at the parabola here, it appeared here and it appeared below. So anything could have happened. The price would have reversed. But when it appeared again and appeared this fourth one, you see that the market, if you enter your trade buy at this particular point, you would make a good profit of a very good pip. So that is for that on buy. That is for that on buy. I would have shown how many pip this could be, but I'm holding on a phone to make this video. I won't be able to use my two hands to uh, drag the lines to show you how many pips from here that you would enter your trade to this particular place. So, but that is that for buying. Whenever you are buying with this great sign indicator, always be confident that the market will pay you eight over 90%. Over 90%. You cannot accurately say that the market will give you 100% because you don't have control over the market. But with a good marketing trading strategy, you'll be able to get up to 90% to 95%. So that is for that. And coming down for sell, you see what happened. As I said, buying up, then selling down. So you see what happened from for sell. As sell, you see the moving average. You see the moving average period 60 at the top of the candlestick, at the top, and the period 15 moving average has also pierced the period 60 downward. The same thing happens to period 5 downward, and the same thing happened to parabolisa upward. So this has shown you that there is a great sign that if you sell, you'd have started selling from here, but it's not advisable because anything could happen. The market or the whole of the indicator has not agreed. So looking at our mode of confirmation, they've not agreed. You should see that the MACD is still showing or was still showing upward, though it was reducing. But I don't advise you to enter trade there. For it to be on a better advantage, you wait. So you look at what happened now at this point where the moving average pierced the 60 period. You see what happened? So at the point where you would have entered your market would have be here. Because the moving average pierced from this particular angle. If you see it from this particular angle, and from the second candle, the MACD agreed that yes, I am going down now. So you can see the MACD started that it reduced more lesser than the way it was before. So it agreed from this particular point. It shows more. It totally agreed from this particular candle. So, but from here you should have entered your market since the moving average has pierced the 60 moving average. So if you enter here, see okay for a good trade on that day, or if you enter here, still okay for a good on that day. So you see, you'd have made your profit after like 230 pips before the market reverse. But this is a good strategy I want to give you. You should not mess with it. Always work with it because it's going to give you a good advantage, a very good advantage in trading binary option volatility. It is all about 10 to 30 pip, 10 to 30 pip, taking 10 to 30 pip of the market result, market profit, and leave the market. So this is it. Whenever you enter a trade here, I'm not with my, it's not because of the phone I'm holding. I would have dragged some things for you. So this is it. Let's assume you enter trade here, buy at this particular opening, and I expect you to fix your stop loss here below the previous candle, just a little gap below the previous candle. You enter trade here, you enter your stop loss here. So that means whenever this market didn't go the way I expected, when it just get to this point, please, I'm okay with the money that we lost. Just cut off, stop. So, but for your profit, please don't expect to take profit from here to this particular place because it's a market you don't have control over. So you don't know what will happen. If the market will reverse after this candle, you don't know. If it will reverse after this, you don't know. So the best advice I give is for you to take just a mere 10 pip, a mere 10 to 20 or 30 pip. So from here to this particular place, you should be able to have 10 to 30 pip. This is volatility trading. The pip is always bigger than forest trading. So like from this place to this place, you'll be getting more than, if I should check now, this is about 60, 360, and this is 7, 8. So you have about 20 pip here, from here to here. So you just take a profit. So what you do is this: you have 3 line, 1, 2, 3. So you enter at the center. Assuming you enter here, you enter the trade here. Your stop loss should be below the previous candle, and your take profit should be not, that is just 20 pip, a very small closer to your entering price. You take your profit 10 to 20 or to 30 pips. It's okay. $1 expectation of guaranteed profit is better than $100 that you have not seen. So don't expect that I want to make $200 from this trade. No. But it's not that it's not possible. It is possible, but by doing that, you may likely run to loss, because the market may reverse without your notice, and all the profit you have made got lost. So the best way to target and benefit from the market is to take a profit of just a very small size, small lot size. So always take a pip that is convenient, that the market will hit without wasting much of time. With just that candles move, your profit with your take profit will be hit. So that is my advice. And secondly, it will also apply to this sell. When you are selling, just enter a trade and just take your stop loss to last previous, below the last or above the last previous. Then take your profit at just a very close distance. You take a profit. So by setting your profit, like for example, you entered from this candle, enter from this candle here, enter from this candle here, then I expect you to take your profit not below this, not below this candle. Then your stop loss not below this, not above this. So with this, you'll be able to control a minimal loss. That's called money management and trading. Money management. And you quickly, in fact, before you could even experience loss, your rate of profit will be 90% above, because you have a very low target profit takeoff. So that is this for trading and making quick profit with this volatility trading. The same setup you can use for volatility 75, volatility 100, 25, 10. So any volatility you are trading, you can use the same setup on them and the same strategy that we use. So, and for you to make a bigger profit, I told you, even if it's $1 you're going to make from that particular trade, just take it. So what you do is to make more money from that aspect. What we do is this: you can open order of 5 or 6. Whenever you see this opportunity, just open order of 5 or 6. Just enter a trade of 5 or 6, 1, 2, 3, 4, 5, 6 or 10. So about, let's say 5. So assuming you open 5 and you put all your take profit at 10 pip, which is $1, $1, which is 0.01. At 10 pip, you get $1. So assuming you enter 5 trade, at the same time put your stop loss and your take profit at $1. $1 multiplied by 5, that is $5 on that trade. So at least, even if it's $1 you make, $5 you make in a month and in a day, multiply by 30 days, you know how much, because this is a market you trade every day, even on Sunday. Volatility market is a market that is open on a daily basis, both weekend and work days. So you can trade on any, so multiply $5 each day times 30. At least you should be making over $150 monthly. So that is why I am advising you on this, and I wish you a great luck using this strategy to conquer forex and making good money. Thank you, and God bless you.